Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Jason Hoody, Head of Investment Manager Research at LPL Financial, to discuss trends in sustainable investing and if the momentum we have seen, in fact, is sustainable or if there is potential for even more growth. Jason, it's great to see you. Welcome to Trade Talks.
Thanks so much.
And increasingly more people realize the sustainability concerns can be addressed through their investments. We've also heard several terms to discuss sustainable investing. What exactly is sustainable investing?
Yeah, there's lots of terms out there. Most simply, it's investing with purpose or doing good while doing well. It's sustainable investments are investments made to identify environmental, social, and governance factors that help drive long-term performance. Let's said another way, it's evaluating this environmental social data alongside traditional financial accounting data. And I think it's really important to understand that environmental social data, or ESG data, with an example. It's the technology company that we all may know of. What are its data centers producing in terms of carbon emissions? And you could take that information now because of the increased amount of ESG data, and you can compare it to its peers. You can compare it to its history so that you can get a better sense of how it's compared. All it's doing, it's supplemental. It's providing increased transparency. So in its most basic sense, sustainable investing is access to an improvement story, finding those companies that are working to be better.
And Jason, why would investors choose to pursue sustainable investing strategies?
It's primarily what we're seeing. There's a global shift towards sustainability. And more people want to see a more equitable and sustainable world post-pandemic. We're seeing it in sustainably marketed products, where they're growing 7 times faster than conventionally marketed products. While there's similar interest in investments, there's only 10% of individual investors have adopted sustainable investing strategies. So there's some barriers that are there.
And Jason, there are 3 ways investors typically reach their sustainable investing goals with 3 strategies. Tell us more about that.
Yes, so it's only most recently that you're hearing sustainable investing on the mainstream, but the first sustainable investing fund was actually launched in 1971. So that's 50 years of sustainable investing evolution. And it really comes down to these 3 key approaches. The first one's alignment, and that's minimizing exposure to business practices or industries that may not align with your personal convictions. The second approach is emphasis. That's integrating ESG data into the investment decision-making process to help mitigate risk and identify opportunities. Within this emphasis, there's thematic investing, which could be gender equality, or it could be community investing. And I think community investing is a great way to identify differentiation from traditional investing, because community investing helps channel assets to underserved communities. So it's exposure to very index-like returns, but the underlying assets are helping with affordable housing or helping with community development. And then the third component, well, the first 2 are about identifying what to own. The third component is engagement, and that is how to own it. So that's identifying ESG strengths and weaknesses, and then using various engagement tools. The asset manager can use various engagement tools such as dialogue, such as proxy voting or shareholder engagement in order to help drive change.
And Jason, I guess the challenge is, in theory, we all hold different values. Is there a standard method for determining which companies fall into the sustainable category, or does more work need to be done on that?
Yeah, I think the bottom line answer is there's more work to be done. There's no single value. There's a lot of data out there of different methodologies. And there's a lot of ways to apply sustainable investing strategies. The important aspect is this isn't binary, it's a spectrum.
That's a great point. And investor interest in sustainable investing has grown significantly over the last couple of years. Do you think that this is sustainable? Is there more growth ahead?
Short answer is yes. I think the bigger question is, are you ready? You see in that global shift to sustainability, 80% of Americans want a more equitable and sustainable world post-pandemic, yet only 10% of individual investors are applying sustainable investing approaches. This is an improvement story. There's a lot of interest in sustainability, knowing that your underlying portfolio is helping improve aligns well. We also saw that 2020 was a watershed year. According to LPL research, 2/3 of funds outperformed. And then also, according to the LPL year in review, you saw flows, investor flows into sustainable investing assets were twice as much in 2020 as they were in 2019. And then the third point I'd like to make is interest. I've been doing this for a while. I would get an occasional calls on this. Last year and into this year, it's pretty much nonstop. LPL has 17,000 independent financial advisors, and within research, we help support them. And I have not seen this many calls come in on this topic. And I think the last point is to make is the awareness. The more awareness there is on this topic, I think there's more higher adoption. Again, it's not giving up investment performance. It's not binary, but rather it is on a spectrum.
All right, Jason, we appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks so much.